Hello everyone, my name is Vishal and I'm the head of trading education for Sharekhan Education, and today I will be doing the weekly market review for the week of Monday the 20th of February to Friday the 4th of March 2022. Let's dive down deep into the markets to see where the key important levels are on the different charts, different sectors and also stocks. So let's get into the Trade Tiger platform here. As you can all see that this is our flagship platform, and let's start with the Nifty analysis. So let's start with the Nifty analysis on the bigger picture or the bigger time frame. Let's start with the monthly chart. And if we start looking at the monthly chart, just around last week when we were expecting to see some kind of a consolidation because of the current crisis that is happening right now between Russia and Ukraine, markets have significantly shown some kind of a down move. And right now, this current candle, which is the red candle, is showing some kind of bearishness. Now, we still have one trading session to go for this monthly candle to close. And more or less on Monday, that is the 28th of February, we will more or less likely get the closing, and we will come to know whether this candle eventually closes like a bearish candle or does it close as a neutral candle. This will still indicate that markets are still in more or less a consolidation to a slightly bullish mode of the market right now. And if you overall see, when we look at the Nifty index, the overall index is in a very strong uptrend, right? So eventually, even if there is any correction in the market, more or less it's going to be bought into by big institutions. So on the monthly chart, we are still keeping this level in contention, which is the 15,932 to 15,352 odd level. So this is the level to watch out for in the months to come. If we move on to the weekly chart, nothing much has changed on the weekly chart. The level still remains intact on the weekly. And currently, prices are seeing a strong reaction from this tested weekly demand zone that we also discussed last week. So this level of demand has again, is this level of demand is holding. And by the looks of it, the way SGX Nifty is trading, the way the US markets are trading right now, we are expected to see a significant gap up on Monday morning. So it'll be very interesting to see where the market opens. But right now, as we speak, SGX Nifty is nearly 235 points positive. So it seems like we are definitely going to have a very strong opening on Monday, and we might see the rally to continue a little bit more further, right? So up to what point this rally can continue, let's go on to the daily chart and let's look at some key levels on the daily chart. So on the daily chart, we had this level plotted from last week, which was this daily demand zone. And price came nicely into this daily demand zone, gapped down straight into this demand. And today it has gapped up. So in our education, we call this gap as a professional gap. So what is a professional gap, and how does it play in the real world when it comes to trading and investing is a very key and important concept, right? So we discuss about professional gaps in our advanced level education or in our premium level education. But now, as the market has gapped up, generally when a professional gap occurs on the chart, the gap, the price tends to move in the direction of the gap. And because of that, on Monday morning also, we are expecting the market to strongly gap up. So now we do see a supply zone, which is a tested supply zone on the daily chart. And if you look at the Nifty, right now, price may not find difficulty in going back and revisiting this 7,200 supply zone. Now, you might see that although this supply zone is created here and it is tested on departure, there are still a lot of unfilled orders over here, and we might get to see a very strong reaction in case if the market strongly gaps up on Monday morning into this area. So this will be a key area to watch out for. Also, 17,200 is a round number. Institutions love round numbers, and we might see some profit booking coming around these areas if price does gap up into 17,200 or tends to move towards the 17,200 level. So this is going to be a key level to watch out for, at least in the first couple of weeks of March, to see if this 17,200 holds. If 17,471 breaks to the upside, then we might see the market moving closer to making all-time highs. So this is going to be a very, very key level for the coming weeks on the Nifty. Let's look at the Bank Nifty now, which is the banking sector. And let's look at it with a monthly perspective. So let's start with the monthly chart. Let's remove all these lines here so the charts look nice and clean. So if you look at the monthly chart right now, is again in a very, very strong uptrend, and the prices are more or less consolidating to showing a lot of bullishness on the chart right now. And the closest monthly demand zone that we see, which is in play right now, is this demand zone from 35,730 to 33,625. Now, if this level of demand continues to hold, we might see the markets consolidate a bit to having a little bit of a bullish view to the upside. All right, so this is a key level for Bank Nifty. And as long as this level continues to hold, we might see a strong buying coming into whenever these levels are retested again. Let's look at the weekly chart. On the weekly chart, we are again within this weekly tested level of demand. And in the last week's session, we had marked this level of demand, and now this level has already played out. So in case if the market again revisits this level, it can play out again because the prices have just barely tested this level and have shown signs of strong buying coming in, right? So this is a key level again for the Bank Nifty in the weeks to come. If this level holds, then markets will have no problem in again moving to the upside. And this is going to be a key level to watch out for. So we'll have to keep a close watch on 39,482 odd levels in the coming weeks. Let's move on to the daily chart to look at what's happening on the short-term perspective. And on the daily chart, we can clearly see that the markets did come into this level of demand and give us a strong bounce, very similar to the Nifty, again creating a professional gap. And now the markets are likely to gap up strongly on Monday morning also. Now, just in case if the markets do gap up very strongly, it's going to be very, very important that both the Nifty and the Bank Nifty, if they gap up strongly and open in supply zones, then there will be a selling across the board of both Nifty and the Bank Nifty indices. So as a trader, we need to keep a close watch. And just because the market is gapping up, that doesn't mean that, you just want to go all out there and buy and try to have a very, very bullish outlook. But it's also important to study the concept of demand and supply and try and understand that what is likely to happen and, who are the people who are buying after a big gap in price, right? So generally the novices are the people who generally buy after the market has already significantly moved up. And the second mistake that novices also make is that they buy in an area where institutions are selling. So the key area where probably there can be another profit booking is this area on the chart. So this is a very, very strong gap level. And if the market does open along with the Nifty, then both the 17,200 level on the Nifty and the 37,426 odd level on the Bank Nifty is going to be very, very key for this market. So we might tend to see some profit booking coming around these levels. So this was about the Nifty and the Bank Nifty. Let's move on to the USD INR. So when we talk about the USD INR generally, and we'll start with the monthly chart, the USD INR and the Nifty index are inversely correlated. So what does inverse correlation mean? Inverse correlation means that when one market is going up, the other market is going down. So, it's more or less negative correlation. So generally Nifty and the USD INR tend to move in a inverse correlation. So right now the Nifty is also consolidating on the monthly chart. And if you can see very clearly that this is the monthly level which is still holding. And this was also the level that we had discussed in the last week's weekly review, where we spoke about how this level of 72 is holding pretty strong. Right now, the markets on the USD INR, the price action is suggesting us that the USD INR is consolidating and trying to inch up higher. Let's move on to the weekly chart to just put in a little bit of an X-ray mode and try to see where we are likely to see this move to the upside. So if you can closely observe now, the closest level of supply is this rally-based drop pattern. And as you can clearly see here, the level has already been tested twice on two occasions. So every time the level gets tested, the orders are going to get filled. And eventually, once all the orders deplete from the supply zone, price will not have any hesitation but to move to the upside. So this is going to be another very, very key level on the USD INR. And now you can also see that price is also holding on to this level of demand. Let's move on to the daily chart to get a little bit of a more clearer picture with respect to the closer levels of demand and supply. And on the daily chart, there is this level of supply that we need to watch out for. And this is a crucial level, which is going to be more or less, as we call it, the origin of the move. So 76, again, very, very close to the round number. And as I mentioned, institutions love round numbers. So if the market tends to continue to move up, if the USD INR tends to move up, the Nifty is likely to head down. But that is unlikely to happen on this Monday because the markets are gapping up. So what we are expecting is that there is going to be another gap down on the USD INR, and any gap down in the USD INR that is in this demand or maybe even lower might again be bought into, and that is the time where we will have to time both the Nifty, the Bank Nifty, and the USD INR coming into crucial levels. So I'm just going to put a note over here that if the USD INR gaps down into the level of demand, that is this level of demand. Just put the text here and we'll just go back and remark this level here. Then at the same time, we want to see the Nifty and the Bank Nifty gapping up into a supply zone. And if that happens, then that will be a perfect correlation between these two markets. That is the Nifty, Bank Nifty, and the USD INR. So more about market correlation, how to correlate different markets, how to correlate positive markets with negative markets, inversely correlated markets, correlated markets, as taught in our education courses. And you will get to learn a lot of other stuff as well, including live trading that happens in the live XLT sessions. We discuss a lot about different approaches that we use in trading and investing in these sessions. Let's move on now to something that is least talked about, but is also very, very important, and that is the India VIX. So let's open the India VIX chart. And the India VIX is generally termed as the fear index. So what generally happens is that when the VIX rises, there is more fear in the market, right? And when the VIX rises, the markets tend to start falling down. So if you see closely, just around yesterday, we had this big green candle making a high of around 34 odd levels. So generally, when the India VIX tends to trade at greater than 30 levels, it's a sign or it's an indication that we need to start being a little bit careful, because that is the time where things tend to become a little bit more expensive, and that's when institutions do a lot of selling, right? But now if we correlate this level with demand and supply, and if we just draw, let's say, a horizontal line across the highs here, this level was more or less in line with this level of supply. Okay. So again, the correlation principle is that the India VIX and the Nifty are inversely correlated. So when the VIX hits supply, we are expecting Nifty to be in a demand. And if you see clearly, when the price hit this level of supply on, let's go back to this date here, that is the 24th of February. Today is the 25th, but on the 24th of February, when the price hit this level and reacted slightly from this level, the Nifty and the Bank Nifty simultaneously hit the demand zone. So again, this was also a very, very key sign to probably give us some kind of an indication that we were expecting to see a reversal in spite of the news that is taking place in the market, right? So everybody had a bearish view, and just look what happened today. Today we had a strong gap up, and now Monday also we are expecting to see a strong gap up. So the news becomes ultimately no news, right? So again, the concept of demand and supply is a very, very powerful concept, but obviously it needs to be applied in a correct and a logical way to be successful at it, right? Trading is not an easy business, as we all know, right? So let's try to use this in a way where we can possibly line this up with some key levels, right? So right now, the closest level of demand on the India VIX is this area over here. And if you look at this area starts from 2291 to 20.44. Now, if the market significantly gaps up on Monday morning, that is at 17,200 levels, and Bank Nifty also gaps up strongly, then we would expect the India VIX to also trading in this daily demand zone. And if the India VIX takes help of this daily demand zone and begins to fall, begins to rise, I beg your pardon, then there is a very likely possibility that the Nifty and the Bank Nifty all will starting to decline or starting to fall. So in this way, as a trader, you can be up to mark in timing your entries in a precision manner when you have all the Nifty, Bank Nifty, India VIX, USD INR lined up in a way where you can try and enter very, very high probability trading opportunities. Let's look at the sector for the week. And this week, we are going to be talking about a favorite sector of a lot of traders and investors, and that's the auto sector. So let's load the auto sector chart here, and let's look at the big picture of the auto sector. So last week, we did an analysis of the IT sector, and we had picked up Infosys from the IT sector. Today, we have the auto sector. Let's look at what the auto sector is currently doing. So if you look at the monthly chart, the auto sector has barely been able to just breach the all-time highs and has been consolidating, right? So it has not found a very, very clear way of trying to show us signs. Right now, we are more or less a little high on the price curve, which means that right now prices are expensive, right? So we just need to be a little careful, because now Nifty is also rallying to the upside. Can the auto sector make a new high? Definitely, yes, it can make a new high. But the likely possibility is that because it is in an area where generally institutions will probably do some profit booking, we call this a supply zone. So we got to be a little careful. Okay, now up to what point or what level we need to be careful? If we look at the monthly chart, we have this closest monthly level of demand over here, which is far away from the current market price. And of course, now because the market is gapping up, we are not going to see these levels in the near term, but these are levels to watch out for, that just in case tomorrow or because of some news, if there is a market crash, the auto sector is likely to hit 9215 and 7989, right? And when these levels are hit, that is the time where you do not want to be thinking about what is the next step that needs to be done, right? So we need to be prepared for even the worst case scenario. And remember, the worst case scenario also brings in the best opportunities as well, right? So it should not be that, just because the markets are gapping down, we should be scared to buy stocks, because this could give us an opportunity to enter into good stocks at these prices. Okay, let's look at the weekly chart now. If you look at the weekly chart, prices are currently trading into this tested weekly supply, and the markets have just been struggling now to break this supply zone. So we are still more or less in a consolidation phase on the Nifty auto sector on the weekly chart, right? And if you look at the weekly demand zones, they are also more or less coinciding with the monthly demand zones. So nothing of those sorts change for the auto sector on the weekly chart. Let's look at the daily chart now. On the daily chart, we did see a big gap down in price, and then prices took a little bit of support from this demand zone. Prices bounced back strongly, but any bounce that is now coming into the auto sector is likely to provide another sell-off, right? So let's mark some key levels on the Nifty auto sector chart, and let's try to correlate these levels with the stock charts that we are going to be bringing up in a short while, right? So 11,276 to 11,467 is another level to watch out for, as most likely if the market does gap up, or if the auto sector does gap up on Monday morning into these levels, or maybe in that week into these levels, then we are more likely to see some sell-off come into stocks such as Tata Motors, or M&M, or Bajaj, or then Maruti, and so on and so forth, right? So let's keep this level in mind. And just like how we had done last time, that we had compared the demand zone of the CNX IT, and we compared that with the with the Infosys stock. This week we are going to be doing the same, but this week we have two stocks, right? So the first stock that I would like to bring up, and I would just like to bring up Tata Motors first, and we'll just do a side-by-side comparison of Tata Motors to see how important it is to correlate the stocks with the sector to get precision entries. So let's open the Tata Motors stock here. Maybe what I will have to do first here is just unlink the graphs here. So I'll just unlink the graphs, and let's remove all the tools. So we look at these charts from scratch. So here is Nifty Auto, and just to this side, I'm going to just bring in the Tata Motors graph, and we're just going to do a comparison just to see if similar levels are lining up on Tata Motors along with the auto sector. So let's mark this drop based rally demand, and right now we are getting a bounce from this drop based rally demand, and let's move on to the monthly chart of Tata Motors first. So again, on the monthly chart, very similar picture to the CNX Auto. Prices are testing this monthly supply zone. So prices are in an expensive area right now. Not a good time to buy this stock, although I know some of you love this stock and want to make it a part of your portfolio, but right now it's really not a good time to enter this stock as an investor. And maybe we will probably look at this with a more or less of a short-term trading opportunity. So let's look at some key levels. On the weekly chart also, you can see very similar to the CNX Auto, the Tata Motors is also struggling in this weekly area here, right? So this is going to be a key area for the Nifty Auto sector as well as Tata Motors to breach, right? Can this level break in the near term, or maybe in a few months? Maybe yes, but it doesn't look like it's going to be doing that based on what we are seeing on the auto sector charts and Tata Motors, right? Let's go on to the daily chart now and just see a few key levels. So if we just draw a horizontal line over here, and if we just look at this line, so prices have bounced from some level, and although we may not be able to see this level on the daily chart, there might be some level on an intraday time frame, right? So if we just put a little bit of an X-ray mode and try to deep dive into this candle over here, we might definitely spot a level on the chart. Okay, now because the prices have already moved up very, very strongly, we won't be interested to possibly enter and take a trade in the middle of nowhere. But what are some of the key levels to watch out for? So I see two key levels over here. There is this gap level, drop-based drop, that I'm going to keenly watch on Monday. And then the other level is this area over here. Okay, so these are two key levels to watch out for on Tata Motors. And because the Nifty is going to be strongly gapping up, we are expecting Tata Motors also to be gapping up into supply. So just think about it now. Okay, you have India VIX in demand. You have USD INR also coming into a level of demand. You have Nifty and Bank Nifty more or less likely to open in a supply zone on Monday morning. And now you have the likes of the auto sector and Tata Motors also opening in supply, which probably is lining up for a good trading week for the coming week to come, right? So watch out for these key levels. Let's quickly have a look at the last stock, which is, I believe it's Maruti. So let's put in Maruti here and let's do the top-down analysis on Maruti. And we will compare the Maruti analysis with the sector. So if we start with Maruti, and if we just look at the weekly chart or the monthly chart of Maruti, right now Maruti is reacting or close to a higher time frame supply zone, which is the monthly chart. The demand zone is far away, so we are still far away, and maybe we'll have to possibly look at these areas a little bit more closely. This is a tested area of demand, and prices have reacted strongly. Right now, prices are closer to supply. So it is likely that at every rise in price on Maruti, we might see some sell-off that is coming in, right? Can Maruti go all the way to 95, 18 odd levels? Surely yes. And obviously the Nifty, the sector, the auto sector is going to more or less try and push, Maruti towards those levels. 9518 from current levels is not really far away, but it's a level to watch out for, and may not come in this particular week, but maybe these levels might get tested in the weeks to come. If you look at the weekly chart, and if you just come down one level from the monthly chart, on the weekly chart, Maruti is more or less reacting to this weekly supply zone. So just like how Tata Motors is reacting to the supply zone, Maruti is also reacting to the supply zone. So our bias on the auto sector is going to be more of a short bias than a long bias right now, right? Because generally whenever we are trading or whenever we are investing, we always want to look at the higher time frames to gauge where the stock is likely to move. And right now, because the supply zone is a barrier on both Maruti and Tata Motors, our bias is going to be that on every rally into a good supply zone, there will be a shorting opportunity. So there might be a sell-off which is expected to come. And that is what we are trying to see on the Maruti chart as well. Let's move on to the daily chart and let us spot a potential level of supply. And on the daily chart, we have this level of supply over here, which is this drop base and then a drop in price. You can also call this as a rally based drop pattern. And it's going to be very interesting because, the markets, when they strongly gap up, there is always a motivation or there is always a push to tell your mind that, hey, maybe you're going to miss the bus. Maybe I think now the markets are going to make all-time highs. Let's go out there and buy. And the moment when you push the buy button and when you buy the stock, then the prices eventually start to come down, right? So wait for the right opportunities. Right now, it's not a good opportunity to invest in Maruti. It's more or less a trading opportunity for you. And these are the key levels both on Tata Motors and Maruti, which are likely to hit maybe on Monday morning or maybe in the coming weeks to come, to say so. All right. So with this, guys, we end our analysis for the week. I hope you enjoyed what we discussed. Much more to come in the coming weeks from the entire team of Sharekhan Education. Thank you very much. Have a lovely weekend, and looking forward to see you with some more analysis next week. Thank you very much, everyone.
We do not give any recommendations or financial advice. We request that the investors please consult their financial advisors or do their own research before investing.